This is DBrief, brought to you by the Australian Industry Group.
Welcome to DBrief, the podcast that explains industry to policymakers and government policy to industry, and is driven by the Australian Industry Group's mission, which is to empower industry success for a better Australia. My name is Louise McGrath, Head of Industry Development and Policy, and I'm joined, as always, by Jeff Wilson, Head of Research and Economics. Hello, Jeff.
Hello, Louise.
And today we have a special guest, Chief Executive of Australian Industry Group and our boss, Willox, who's going to give us an update on the Economic Reform Roundtable from being in the room where it happened.
Hi, Louise. Hi, Jeff. Great to be with you.
Now, I've got a lot of questions on reports that the catering was very bad, but probably we should get into the more detailed impact. There were so many issues that were discussed over the 3 days. We can't cover all of them. So there's a couple of key ones that we went in with specific asks. I know that the first day started with international trade. International trade, that's in flux at the moment. There's a lot of global pressures, but what was sort of conversation like in the room?
Well, first of all, the coffee was by all reports pretty bad. I don't drink coffee, but I think everyone was desperately looking for an alternative outlet after 3 days. But it was a really good place and an interesting place and the right place for the roundtable to start taking into account the global circumstances and there from that the domestic pressures that were being applied to Australian businesses. And of course, it was really pleasing because it was a recognition that trade plays a big part in the productivity equation for businesses, whether they're importers or exporters or impacted by imports or exports. So it was a great place to start, recognition that things have changed internationally. A couple of key points came out of that conversation, which I think were really important for industry. First of all was, yes, trade is impacting us all and we can't leave settings as they have been, and that there needs to be swift action around trade and tariffs in particular. Now, tariffs is the word of the year. I reckon it will be the Macquarie Dictionary word of the year at the end of the year because of the impact it is having on businesses. So we put forward a couple of quite specific recommendations or asks to the government around simplification of the trading system to sort of grease the wheels for Australian businesses when they are interacting globally. A couple of things came out of that. One was a lot of conversation around what is called the Australian Trusted Trader program that the government has in place, which basically makes it easier for businesses who are regular and, as the word indicates, trusted traders to navigate the trading system. It has been well taken up by business, recognised by business as being a boon for business. But the problem was that, where government was at in terms of money allocated to it, it was sort of running short or out even. So we put forward a proposition that given the success of the program that the government needed to expand it. And I'm pleased to say the Treasurer, that was the first recommendation that the Treasurer received out of all the recommendations that he got. And I was really pleased to say we put it forward and the Treasurer was delighted to receive it because it kicked things off. And he has, at the end of the 3 days, said, yes, we government are going to go away and look to expand the Australian Trusted Trader program. Quite frankly, I'm not speaking out of school here, but he's got a lot of territory to cover. He wasn't quite sure exactly what the Trusted Trader program was, but he went away and did his homework, got a briefing on it and came back at the end of the 3 days and said, yep, you've hit a nail on the head there. We're going to look to expand that. So I think you should look to announcements on that coming up through the next budget. It's a budgetary measure, but the proposition is there to expand it. And Louise, you can explain exactly what that means for business as they go forward. Point 2 was around nuisance tariffs, tariffs which live up to their names. They cost business an enormous amount of time and money and they present very little relative revenue for the Commonwealth. Tariffs on small items and large, but just a waste of time. And the Treasurer last year announced the eradication of several hundred nuisance tariffs, and the ask at the roundtable was to go much further. Nobody quite knew in the room how many nuisance tariffs there are because they're a nuisance and tracking them is hard. But the estimation was somewhere between 500 and another 1,000 tariffs. And so the Treasurer, who'd taken action last year, was encouraged by this and has moved very swiftly already within a week of the roundtable to eliminate around another 500 nuisance tariffs, which we think is a really positive thing because of the time and cost saving for business. This is part of the conversation that we have to make things easier to trade. We had a lot of discussions too around ports and port operations. Of course, there are three parts to port operations: at sea, at port, out of port. A lot of the focus was around at port, how to improve productivity at port. We'll just see what comes out of those conversations. I think it's been taken away and will be the subject of further conversations. Of course, it's got heavy industrial issues related to it as well, but the use of technology and digitalisation, if I can call it that, within the ports to speed up processes is really important to business. That point was made and taken on board. So I think they're the three main takeouts around trade and tariffs. Of course, the entire conversation, Louise, was shrouded around the changing global economic and political environment, what we call the geofinancial environment. It was a really important place to start, and it was good to get down to specifics. No one at any time talked about retaliatory tariffs or suggested that. It was very much Australia sticks to its adherence to a free and open trading system, and we become and are advocates for it. And there was discussion, which is way beyond the realm of the roundtable, but around the revival of international trading systems, the relative decline of the WTO. The Cairns group has not sort of been highly active lately around trying to get Australia more involved in global trading systems. There were a lot of ministers in the roundtable. In retrospect, it probably would have been really good if Don Farrell, the trade minister, was in the room too, but he was one minister who wasn't there. That's fine. We got a lot done in that space.
Well, I think that the Trusted Trader, as you've seen, I was part of the creation, the original committee organising that. And, I think we've got to expand it. It was stalled because we thought the simplified trade system would solve all problems. That is really difficult. Every time we had, a conference on the simplified trade system, I think 6 different ministers had to have a chance to speak, showed the scale of the problem. So I think Trusted Trader is one way of doing it. Nuisance tariffs is another. The other, though, is the whole IT infrastructure that supports our trading system, the ICS, which is over 20 years old. It's built by government. To be fair, probably wasn't great when it was new. It's going to fail at some point. Was there any discussion around trying to update that? Because that then unlocks a whole lot of other productivity and sort of risk-based activities.
Yes, there was conversation around it. And this was the interesting thing about the roundtable. A lot of the conversations blended in or bled into others. So it sort of it fell into a conversation as well around, which was sort of headlined artificial intelligence, but was really a digitalisation conversation more broadly, and digitalisation. And what came out of that, not specifically on this point that you were making, but more broadly, was I think it's fair to say the government have become converts to artificial intelligence and the notion of digitalisation. I think if I was to surmise it, I would say up until a couple of months ago, there was probably some wariness. I wouldn't say reluctance, but wariness around it. And I think they've come out of that of the roundtable converted. In fact, it was one of the 10 takeouts of the Treasurers was to say that we needed to modernise government and government practices, processes, programs to be much more digital and AI savvy. What keeps coming up in conversations with government when you're talking to them about digitalisation and of services is this, and they describe it this way, is this ghost or spectre of robo-debt, which you may remember was a program under the previous government, which attracted a lot of attention around use of digital services, intelligence and the like to try to reclaim social welfare debts or perceived or claimed social welfare debts, which often weren't there, which I think really has set back the government, not just this government, but general government appetite to digitalise and digitalise services. This roundtable, I think, maybe has given them the confidence to push ahead, but there was a lot to use. The other word that kept coming up in every conversation was trust, but there's a lot of work to do from government to rebuild trust around digitalisation of services. So back to the drawing board, yes, it was on the agenda, but it's part of a bigger picture around how government thinks about framing the services it provides.
And I think that robo-debt and that automated decision-making didn't just chill innovation within government, also within business. A lot of companies I've spoken to looked at it and said, we don't want to be at the other end of a royal commission or inquiry.
Yeah, I think it did enormous damage to the appetite. But it was really interesting. The other point, just sort of segueing away, was that we had Victor Dominello, the former New South Wales minister, who was responsible for Services New South Wales, which provided an enormous uplift in capability within government around digitalisation of services, driver's licence, fishing licence, hunting licence, all of those sort of things. But everything, your whole relationship with government sort of went onto a digital footing in New South Wales. He was in the room, and I think he will be quite an important person going forward when the government federally is thinking around how do we go about digitalising services and programs as well. So I think that gave people confidence. The fact that he was there, he had good stories to tell, I think was really important.
Yeah. Well, speaking of New South Wales, of course, the New South Wales Treasurer was there representing all the states, and a lot of the issues we identified leading up to the roundtable were the issues between, really the federal system and the breakdown between states. So another topic was single economic market, which sounds ludicrous. We federated well over 100 years ago. Surely and that was the aim, to be a single economic market, was still not there. How do you think that conversation went? Is there a great appetite to just sort of knock heads together and get stuff done?
I had the great pleasure of sitting next to Daniel Mookie, the New South Wales Treasurer, for 3 days. So we were seated together. Well, other people, a lot of other people got moved around the room to cater for external speakers. Daniel Mookie and I were always together, sort of joined at the hip. And I went into the meeting describing him as perhaps the second most important person in the room, because he was representing all the state treasurers. And I can report that he faithfully reported the views of other states as he went through this process. So I think this is where we're going to hit the issue of hope running into reality here. Untangling 125 years of federation is going to be a not easy or linear process. But there was broad understanding from the states that where possible, they have to do better to harmonise and simplify their processes. And one of the big takeouts was that we need to move towards becoming 125 years after federation, a single national economic market. And that involves a lot of harmonisation, a lot of simplification. in some key areas across our economy. And this comes up in many different forms. Again, these conversations move through different topics, but there was a lot of conversation, for instance, around, we'll talk with Jeff in a minute, around tax, but around payroll tax, for instance, and the notion that if the states could harmonise their payroll tax systems, it could then sort of be treated as a consumption tax and a sort of a once-off tax that maybe the federal government could collect and then distribute. I think we're a million miles from that, but I think the will is now there to really push ahead with some of the big conversations. We've already seen that from the federal government doing work to harmonise national occupational licences, particularly in the electrical industry. And then, which is tough because it's tied up in both state revenue and in the industrial system from, 125 years ago. So it's untangling both of those. But if we can crack that nut, then we can move that to other occupations and then across to other fields. So I think that's recognised as a starting point. But the fact that we are now really pushing a single economic market is a really positive thing for simplification and harmonisation for business. This will be a gradual process that will probably still be occurring well after you and I and Jeff have left this mortal coil, but we're now on a pathway.
Well, I think we've moved now from the assumption that it's all working to identifying the problem. So that's really the first case.
Yeah, absolutely. And the fact that Daniel Mookie was able to, in a lot of cases, say, yeah, we could do better. At the same time, I've got to say there was a bit of conversation that some things could be done better at state level. But, this will all be worked out as we go through. There was and this all fit in to the other conversation we had around, which you're hearing a lot about in the media now, around sort of how the federal government moves ahead with its environmental protections and biodiversity proposals, which is almost, again, the notion of a single market in many ways in terms of approval. So this was a big thing. How do governments work to improve, speed up, or reject approvals processes for big construction, critical infrastructure, critical energy works? Which often cross state boundaries, but how do they work together as a single market? This is a sort of, I would say, an example of a single market thinking at work.
Yeah. And as you say, we've been a long and loud advocate as a country for free trade, global, coherent rules. And 80% of our trade is now covered by free trade agreements. But perhaps we should have turned our eyes inward and done a bit more in the domestic setting to make it just as easy to send stuff from Melbourne to Perth as it is from Melbourne to Singapore.
Well, this is the thing. Remember, if you know your Australian history, you know that the big debate at the start of Federation was free trade versus protectionism. And in the end, the free traders won, which was a good thing. But we forgot about free trade within our boundaries as well. You're exactly right. So, look, every dog has its day, and 125 years on, we might be heading in the right direction. I mean, the old one but good one kept coming up about the standardisation of the rail gauges, which didn't get finished until the 80s. So we can hope for progress.
Yeah, I remember having to change trains at Albury.
I did too.
These things aren't as deeply ensconced as people sometimes imagine, though. And it's like, just you mentioned payroll tax. Everybody forgets payroll tax was a Commonwealth tax that the feds gave back to the states in
1962.
Yeah, it was Menzies. And it was because after the post-war baby boom, the states couldn't pay for schools for all the kids. And so the Commonwealth, this was a Commonwealth tax that was handed back. So, some of these things that are constitutional, they're actually a bit more, like a lot of these things in our system are a lot more recent than that. And it's been like that since day dot. Well, day dot might have been pretty recently on a lot of these regulations. Yeah.
Well, same with income tax. The states did their own thing up until the Second World War when I think it was Chifley sort of grabbed hold of the power for the Commonwealth to be the single collector of income tax. Our system is very gradually working its way towards a single market, but with some backward steps here or there. But I think this will give us a big push, particularly around, look, where I think, Louise, Jeff, that we'll talk about tax in a minute, which is very important, but where I think the biggest initial gains out of this roundtable will come in sort of the regulatory mindset more broadly. And part of that regulatory mindset change is that move towards a single national market where possible.
Great. Well, that's a good segue, Ines. We'll have a small break for an ad and then come back and you and Jeff can talk about regulation and tax.
Our favourite things.
The largest Australian workplace changes in over a decade
Underpaying
are about to
workers
impact
could
your
result
business.
in crippling fines.
There'll be new rules about when a casual employee
The laws are
has the right
employees will have the right
to disconnect.
Workplace laws are changing. Pay attention or pay the price. Safeguard your business with Australian Industry Group. The legal experts at Australian Industry Group will help you navigate the new legislation and prepare your business for the changes. Become a member today at aigroup.com.au.
So welcome back to DBrief, everybody. And Louise and I are continuing our conversation with Ines Willox, the Chief Executive of the Australian Industry Group, who comes back to us after spending some significant amount of time last week in the Treasurers Economic Reform Roundtable. We just spent the first half talking about regulation, but now we want to move on, Ines, to tax, which is something that's very close to our heart, but might be a bit maddening for a lot of our listeners. And so strap in, you are listening to a podcast about tax now. Before the summit, Ines, we went in with a couple of big things on tax because it's a very big, complicated mess. Our group took this position publicly. One of those was the tax burden in Australia is too high when you compare it to other peer-ranked OECD countries. The second one is this also very complex. We've done some work that thinks that a business operating nationally across all states and territories is probably paying over 100 different taxes in Australia. Why is it 100 and not 50 or 10 or 1, for example? Why do we have to do this? And then the third one came back to complexity and simplicity. In the first half, we talked a little bit about payroll tax, but also that just the compliance burden of having all of these different systems. Lots of people jumped on the tax bandwagon before the summit after the Treasurer had given a press club address where he opened the door for these submissions. We're really curious as to what was the discussion in the room, because tax reform has been the white whale that Australia's been pursuing for 25 years unsuccessfully.
And we'll be pursuing for a bit more, I have to tell you. But there was a lot of conversation around tax, but as an ancillary to that, there was also a lot of conversation around spending, because you tax to meet your spending needs. So I'll start very quickly with spending. There's been some media coverage on this. I said it a little earlier, I sat next to Daniel Mookhey, the Treasurer of New South Wales, but on either side of us was Jim Chalmers, the Federal Treasurer, and Ted O'Brien, the Shadow Treasurer. So Daniel and I were sort of sandwiched between the two sort of main politicians in the room. Plus, there was also Allegra Spender, who is very big on tax reform, and I'll come back to that. So there was a big conversation around spending at first. Before we got to tax was the spending conversation. And you will have seen the to and fro between the two in the room. Do you have fiscal rules or don't you? But the very strong sense in the room was that Australia does need some fiscal rules. There were fiscal rules in place through the Howard Costello years and the Rudd Swan years. And then the global financial crisis hit and made that difficult. But there were rules in place around spending. And there was a strong sense in the room that we should go back to some rules, not defined, but we needed to have rules in place. That would then allow us as a country to sort of work our tax base to make sure our tax base was fit for purpose. There's no point in taxing unless you know how much you want to spend. So that's the first point. We need to go back to fiscal rules, and we strongly argued for that. It makes logical economic sense to do so. then it's up to government to describe what those rules should be and to defend them. The other point was that we are one of the few, and we were the first, to have a Charter of Budget Honesty, which we saw as a very important document as well. But when it came to tax, there were three separate, distinct parts of the conversation. One was aimed at the general public, I'll call it that way. The second was aimed at business, and the third was, and business investment in particular, and the third was aimed at the system itself. Quickly running through them, there was sense in the room. Well, the overall sense was that the tax system as we now have it is not fit for purpose, is overly complex and convoluted, and is not meeting our economic or our societal needs. So I think we need to say that there were three parts of this, three packages. The first was around the tax system, particularly as it applied to younger Australians. Now, there was a lot of conversation in the room, and you'll have heard it since, around this sort of notion of intergenerational fairness. I've got to say, within the room, there was a lot of hesitancy and anxiety about the use of that term, intergenerational fairness. Why? Because there was concern that you, through using that term, setting one generation, young against old or old against young. But with younger people paying a HECS debt that sort of people in their 50s and 60s don't have, often a significant HECS debt, a housing market being harder to get into, there was recognition that more needs to be done around assisting working Australians, that is particularly younger working Australians, get ahead. Now, there wasn't specific conversations before the summit. There had been talk around more super taxes, negative gearing, taxes on unrealised gains, capital gains. They came up tangentially, but nothing was affirmed in the meeting to say this is what needs to be done. Just government go away and have a look at it, Treasury do some work, and then come back to people in the room and more broadly with some ideas and proposals. So that will come. So you should expect that, I think, in the lead up to the next budget. The second point of that was that no matter what the government does, do not leave it to tax experts to try to sell tax changes. They are the worst people in the room because everyone thinks their model or idea is perfect. And if you want people to be rigid in their thinking, talk about tax law. So don't ask tax experts to do this and sell it. Input, but don't ask them to sell it. Point two was business. Really important conversation, very quick recognition that at a corporate tax headline rate, Australia is not competitive among the OECD, where there was a presentation from the Grattan Institute. They said we ranked third or fourth when it came to headline corporate tax rate in the OECD. I think Germany, France, Portugal and Colombia rated above us. Don't quote me on that, but they were the four. But then that didn't take into account the other myriad of taxes that corporates also pay, and which we've referred to and got picked up in the conversations. Corporate tax is somewhere between 50 to 60% of what corporates actually pay in tax. So that got picked up. That was really positive. Recognition straight away, the tax system for business as it's structured is not set up for investment. The Productivity Commission had put forward a proposal around a two-tiered tax system, widening that, 30% for larger companies, 20% for smaller companies with a cash flow tax. Productivity Commission made it very clear this was just a proposal, a draft. They weren't wedded to it. They were trying for reasons to to encourage investment and innovation. They argued that that particularly came from smaller businesses. So this was an idea, but they recognised it wasn't perfect, I think would be the best way of describing it. So again, Treasury goes away to look at the tax system for business to encourage investment. A lot of conversation around instant asset write-offs and other systems, Canadian system, new American system, basically instant asset write-off for anything for business, was seen as Australia was not competitive in that environment or increasingly less competitive. So that's another proposal to take away around instant asset write-off. And but that shouldn't be at all when it comes to improving the tax system for business investment. That was recognised. Third was the system is convoluted, complex. The head of the ATO, Rob Heffernan, said that they've got theoretically, if you're paying income tax, you should be able to do it in 15 minutes or less on the ATO website. Everyone looked at him with some incredulity, saying, well, that's not our experience. And then I made the point, I live in Victoria and I get hit with all these other taxes that the ATO doesn't count. It happens with other states as well, so it's not simple and straightforward. So let's go away and simplify the system. So, huge bodies of work, not to be done immediately, will take time, but we need to hurry because as each day ticks by, the tax system becomes less and less competitive and less fit for purpose. But there are three big bodies of work you're going to hear more about and we'll be involved in the drafting of all three.
Can I ask you this? Where were the states in all this, to loop back to our earlier conversation? Because when we have a look at some of those taxes, it's often at some of the state level, particularly, the big three, which is duties on conveyances, payroll tax and insurance taxes are all state taxes. To some degree, we've tried to label these taxes of constitutional necessity because, under the Constitution, there's only a limited thing that states are allowed to tax anymore. So I think if you asked a lot of state treasurers, they wouldn't say, yes, we think taxing job creation is a good idea for our state, but it's payroll tax is one of the few chunky bits of revenue that they're constitutionally allowed to move to. In that conversation, you've just mentioned this has been back to the Treasury. The Productivity Commission still consulting on that proposal you mentioned will be part of that discussion too. But was that part of how did that fit with that regulatory? Is it just like the regulatory discussion, like how the state's going to be brought back in there? Conscious there was only one state treasurer in the room of six.
Yeah, and he had to represent all the states, and he did it very well.
All six, yeah.
But there was recognition, that their tax base is anti-productivity, basically. So conveyancing taxes, land taxes, all of those sort of things are bad taxes, essentially. Conveyancing tax, the point was made, well, the ACT is is sort of the guinea pig, as it were, nationally around trying to transition to a land tax system, not going smoothly and I think not raising as much revenue as the ACT thought it would. And it's a 20-year transition. It's a generational transition. So my takeout from that was two things. Yes, current system not good. Changing to something new is going to take time and will be perhaps not as smooth or as revenue positive for the states as the current system is. So they're working that through. But more broadly, I think it goes to that harmonisation issue that we discussed before. It also goes to simplification and it goes to basic fairness. And I think there's recognition that we fail on all three counts at the moment. But the state treasurers are meeting on the 5th of September, which is their first meeting post the roundtable, and that will be the beginning of work that they will undertake around the issues that have emerged from the roundtable to push forward. The first thing they will discuss is road user charges, which is a whole other hornet's nest. in that, there was conversation around how to approach. Do we need to do it? Yes, we do. How do we do it? Well, the Treasurer's gone for we're going to take on electric vehicles first, but there was a lot of conversation for our constituency in particular around trucking as well and how that would be impacted. Another big body of work to come out, but it's given the government the imprimatur to move forward. Yeah, but the state tax base and revenue base was the subject of a lot of conversation.
That's fantastic. Thanks very much, Ines. Unfortunately, it's all we've got time for, and it was 3 days. There's so much more we could cover, and we haven't even covered my favourite topic, which is Asian languages and what we should be doing
Which
there.
got a big run.
Good,
So,
good.
3 days in a windowless room. We all hope that it's contributed to improving things, but this is not going to be a quick fix. The point I made, Louise, coming out was people expecting, things to be turned on their head overnight. They're going to be sorely disappointed. The point was made, you can only float the dollar once. So where we're at now is sort of incremental change, but some increments can be larger than others.
Yeah. And it's really where the hard work is too. And not that all the reforms earlier were that easy, but it's a lot of micro hard work.
Yeah.
Boring.
Get ready for some grind, I think.
Yeah. Yeah. So it sounds like Jeff and I and the whole team have got our work cut out for us in the next 12 months.
Years of work.
Thanks, boss.
Anyway, thanks very much, Ines. So thanks, everyone, and thanks, Jeff. Next fortnight, we'll probably talk around R&D. The first third report was released this week, so we might get David back to talk in more detail about what we think around that. But if you found this podcast via the AR Group website, please subscribe on your usual platform so you don't miss an episode. And if that platform lets you leave a review, please do take the time to leave one, because we love all feedback, especially positive feedback. My name's Louise McGrath, and if you have any comments or questions, please email industry.policy@argroup.com.au, and we'll speak in 2 weeks. Thank you.